All right, so now we're gonna share the screen. Boom. Okay, so can you all see my screen? It's been a while since I actually did a Zoom. Let's see. Everyone. Okay, nobody's saying anything. Can you all see the screen? I see people on here, but no one is typing. Okay, can somebody type in the chat? Okay, cool. Thanks. Chat disabled. How come chat is disabled? Okay, I don't know how to enable that. So sorry. So however Ricardo used the Q&A, hopefully you all can see that because I have no idea how to enable chat. I haven't used Zoom in a long time, and they have apparently added a whole bunch of new stuff that I'm not really familiar with. And I see no way to enable chat. So hopefully we don't run into any issues with that. All right, so coming over here, you all should be able to see my screen. I'm going to be honest with you. I was going to do a very nice PowerPoint for you guys, and I still might do that later or whatever. Oh, we're going to use this one. I still might do that one, but right now, I didn't really have time to do that. And to be honest with you, it's not really necessary because these settings on the EA is pretty much self-explanatory, especially if you know how to trade. Even if you know how to trade a little bit, you should pretty much understand this once I go over it. Let me see if this thing has a whiteboard. Oh yeah, it does. Okay. All right, so you should pretty much understand it. I probably do these a couple times as well because this is not the format I wanted to really do this one in. So I probably do it again in the format I was going to do it in originally with a PowerPoint, and then just kind of go from there. There is a manual for this, but the manual doesn't talk about the reason why I didn't release the manual is for the simple fact that it has RSI, which you can use anything you want in here, but I told you guys to do pure hedging. Okay, it's a completely different strategy. But again, feel free to do whatever you want. Okay. In this instance, okay. Let's see, mouse. All right, so really quick. All right, so explaining the settings. So whenever you come back here, you want to make sure you have all this unchecked. Nothing should be checked here. The only thing that should be enabled. Oh, before I even talk about the settings, first of all, hold on a second. Let me look at my notes here. All right, so before I even get into the settings, let me stop the screen share because I do need to go over some things first so that you will understand how this works. Let's see, screen share, whiteboard. All right, so I hate this new Zoom thing. Okay, so first of all, understand that this bot, okay, we have several bots with UOPFX, okay? Now we are in the process of redoing our whole website. So unfortunately, like some of the ones that's already there, you all can't access right now because the links are coming up broken. And that's for the mere fact that we're changing the site and we didn't want to update the links twice for you guys that are actually customers of UOPFX. If you bought this, then you're technically a customer, but you don't necessarily have the academy part, etc. Most of you guys do, so you get what I'm saying. So we have several bots created for different market cycles. So you have to understand what a market cycle is, and without really getting too technical in regards to what a cycle is and all that, basically it's just seasons where the market changed. So you got winter, spring, summer, fall. Okay. So each one of those seasons throughout the year, the market changed. That's a different market cycle. So in the fall, pretty much you may get a ranging market. In the summer, you may get a trending market, etc. Okay. So we have bots pretty much for every cycle there is at this point. All right. Now, this particular bot here was created for ranging market specifically. Okay. So it's going to work best in a ranging market. All right. That's what it was created for ideally. Okay. Now, there are some instances to where you can tweak the settings and it can work in any market, but that's going to take a little bit of testing. And obviously, if you have more experience with trading, you'll be able to figure this out fairly quickly, especially once I go over the settings here later on. Okay. When you're using a bot, you want to avoid news. Okay. So hopefully you all are writing this down. So what you want to do in a situation like that, you can go to forexfactory.com and check the news, or you can go to investing.com and check the news. Now, if you're using a USD pair, obviously you're going to look for USD news. If you're using a pound pair, you want to look for pound news. So whatever pair you're using on the cross and the main currency pair on that, for example, Euro, USD, you want to look for Euro news and USD news, for example, to make sure there's no extreme news happening during the period that you are planning to use it. Because if there is high impact news, then you're probably not going to have good results with the bot. It just depends on the direction of news go in. Okay. You can end up in a whole bunch of unnecessary drawdown. You want to also check the charts. Okay. Check charts of pairs to see when ranging happens. All right, so let me spread this out. Okay, so you do have to do a little homework in that regard. All right, you want to run it during Asian and London in most cases. All right, that's where I've seen the most success with it, depending on which pairs you're running. Now, obviously, you want to run it with pairs that don't necessarily move in that market. Now, Euro sometimes moves during London for the most part, but not much. Excuse me. You're going to get the most movement out of Euro USD usually during the New York session. So you got to view it like this. And I view my personal trading like this. The New York session pretty much is when all the bosses are at work. You're going to get the most news, the most volatility, et cetera, is going to happen during the New York session. You're also going to get the most inconsistencies and or price manipulation during the New York session. So it's not my favorite session to trade. Honestly, I prefer London. But if you run this during New York, I mean, I suggest you do it with caution because, again, your ratios could go down. You also have to know when to close the trades. All right. Now, this is a big one, okay? Because some people ask, okay, when do I close trades? Close them when you're done trading. You don't want to try to wait to price hit zero or the EA close everything out, because this EA is not designed like that. It's not going to close everything out. All right. So if you're up $3,000. This is just a hypothetical. Oh, I'm not even going to put a drastic number up like that. Let's say if you're up $1,000, but you're in $300 drawdown, and you know that New York session is about to start, or if you're running it during New York, you know that the market is about to slow down after 11 o'clock. Okay. Don't try to earn more profit. Like, this is where you got to learn how to control your emotions as a trader and not try to go for more. Okay. Because $1,000, okay, in close profit with $300 in drawdown. If you close that out, you're going to make $700. Okay. $700 is better than no dollars. $200 is better than $0. Okay. $100 is better than $0. But by you trying to hold on a little bit longer, knowing that you probably should have closed the trade, could end up being costly, not only in your personal trading, but also with this EA. Okay. Because if you hold on to it afternoon, in most cases, the market is going to start acting weird, and you're probably going to end up in drawdown that you probably should have never been in to begin with, if you would have closed the trade. So you close the trades, all of them manually, not just one. You're going to go into MT4. You're going to turn off auto trading. First of all, let me put that here. You want to make sure turn off auto trading in MT4. Okay. Make sure you do that, okay, before you close the trades, because if not, it's going to keep opening up new ones. Okay. So turn off of that and then close the trades and take your profit for the day and start over tomorrow. Okay. Live to fight another day. You also have to manage the software. This is not what some of you guys want to hear, but this is the reality of what it is for 99.9% of the EAs. All right. In 2024, I plan to have 90% of my trading automated. This is my goal, to have 90% of my trading automated. So we're creating tools so that can be possible. And obviously I'm sharing one with you now, or I've shared one with you guys that we are going to be using and fine-tuning throughout this process. Okay. So you got to manage the software though. People that trade with algorithmic trading on the stock market or the big banks, etc. Guys, they're not just letting the software run and walking away from it and not looking at it. Like, this is the misconception about EAs in the marketplace that people are selling people, right? They tell you, hey, you can get your EA, you set it up and you let it do what it does. Okay. Just like anything else, software is not perfect. It can make a mistake. It's technology. But for the most part, if managed properly, it can be very, very profitable. Okay. You got people that are trading billions, millions, and billions with a B of dollars with algos or expert advisors. So whatever you want to call it. But they're not just doing that and walking away from it and putting blinders on their eyes and not monitoring it. That doesn't necessarily mean that you have to monitor it the entire time, but there is monitoring required in regards to the software. Okay. So make sure you pay attention to how it's working, what it's doing, etc. Okay. So that you know when to close the trades out. Okay. Because this actually goes hand in hand with, what I'm talking about here. Okay. These two are hand in hand. And come on, draw thing. Hand in hand. And this is not just for this software. This is for any software. For example, we got the Sniper Pro, Sniper Pro Gold, for example. And there's people killing it with that. Like, I got a guy that actually started his own PAM account with that EA. And some people say, hey, we can't get it to work. And I know through my testing, we've passed a number of challenges with that EA. Okay. And made a lot of money with that EA. I know for me it works, but I also know how to trade and I also manage it. And this guy actually started his own PAM account with the EA. We got several people actually that have PAM accounts and that are managing accounts with Sniper Pro Go. Obviously, we're not going to put their names and stuff out there to protect their privacy and their business. But I'm telling you, it's happening. And the reason why it's happening is because they manage the software. They understand how it works and they manage it. They're not just turning it on and going to sleep, okay? Or going about their day and not watching it for 3 days. That type of situation, okay? So final thing is testing. This is another reason. Uh-oh, what happened to my whiteboard? What happened to my whiteboard? Okay. All right, so select. All right, so you want to test. All right, anytime you're trying to create a new strategy or figure something out on a new pair, understand with trading that each pair moves differently. No pair is the same unless or some pairs move the same for the most part, but some of them don't. For the most part, there are some differences there. So you will have to test different settings, etc. And again, this is another thing that people don't want to do. Everybody wants to get rich, but you don't want to put in the work. You know, you don't want to put in the hours or the labor required in order for you to be successful with trading and also with an expert advisor. Okay, with anything, you have to test. I can give you settings right now, but it may not work according to whatever your personality type in regards to trading. Like some of you guys, you know, it may not work for the pair that you're using, etc. And one thing that we don't want to do, which is why we're not selling this to a large number of people, is to have 5,000 people all on the same pair, okay, all with the same exact settings on prop firms. Doesn't really matter on a traditional broker, but most of you guys are trying to use prop firms. So if we got 2,000 people with the same settings on prop firms, and then you're using the same prop firms, for example, that's going to be a disservice for all of you all, because eventually what's going to happen is the prop firm is going to identify, hey, they're using the EA and it looks like it's the same strategy, blah, blah, blah. So let's add a plugin to stop it from working. All right. And when that happens, obviously we got to update the software and tweak the algorithm to make it work again. But there's really no way to really know that for you guys unless you're getting results and all of a sudden you're not anymore. Okay. So we're going to try to avoid that. And I don't think we'll have an issue with that because, again, like I said, I'm not selling this to a mass amount of number of people. Okay. But it's important for you guys to test. And then once you figure out what works for you, it's up to you if you want to share it or not. Right now, there's only 22 people in the group, so I don't think it'll be an issue. But, you know, you find something that works, you got to, you know, you might want to hold on to that. Especially when other customers come in, because again, if everybody's on the same firm doing the same thing, then guess what? It's not going to work anymore. Okay. But I'm going to share with you some different strategies and insights on how to use it and how to tweak it, especially if you trade, because on the setting side, a lot of it is just common sense. Okay. So let me look at this Q&A recording. All right. So let me stop the screen share there. And let's go back to the desktop. Okay, so you all see my desktop, right? You should be able to see that. All right, so I'm gonna assume you can because the chat is disabled. So anyway, let me bring up the annotation thing here. All right, so when you first come back here, obviously I'm not going to go over the installation process because this pretty much already tell you what you need to do. You got to add a domain name under the tools section. Well, I guess I might want to do that because some people may be on here that haven't installed it. So you're going to go under tools, get rid of that. You're going to go under tools. You're going to go to options. And then you want to allow automated trading. And then you want to click allow web requests for a listed URL. And then you want to type in this URL, which if you try to install the EA and you try to load it, it's going to give you the URL. It's just basically https://UOP-forex-indicators.com. It's plural. And then hit OK. And then you should be fine to try to run it. Now you will notice that you actually have a demo and it says expiry 6 days, whatever. Okay. Now, if this gets close to the expiration, all you got to do is email support@uopfx.com, give us your account number and your name, and we will activate it for you. Okay. But for demo purposes, if you're only going to be testing a week or whatever, do not email us telling us to keep switching your license because that will get tedious for that department. And we don't want you to be switching your license 20 different times. So every time that you load this on a different account number, you will get a new 7 days to try it out on that. Okay. Now, if you feel like you need to test for 30 days or whatever, then you can send that account number again to support. We'll change it. We'll activate it for you. And then once you're ready to do your permanent license, we will remove it off your demo and switch it to your permanent account. Okay. So hopefully that part is clear. Let's see. All right. So coming back under the settings. Okay. Pierre asked, can I break down how you manage the software? It's not really complicated. I think some of you guys are really overcomplicating the process of what I'm saying. It's not complicated. I'm technical, but I'm simple at the same time. And you probably like how you do that. I try to create systems to simplify things. Managing the software simply means monitoring it, right? That's essentially what I'm talking about. Monitoring it, making sure, things are not getting out of whack. Also looking at the market to make sure nothing has changed drastically in the market, which it shouldn't. And just making sure it's doing what it's supposed to do. Like, this account is 5,400 negative. This was actually a trial account here. So I let it run. But for example, if I see that I'm getting close, even though it's an equity protector built into it, FYI, but if I notice that, this been running a while, and let's say, hypothetically speaking, if it's been running 3 hours and I only close 2 trades out in profit or what have you, then I know it's probably something I need to tweak, or I just need to shut it down for the day. Okay. Or if it's running for 2-3 hours, no trades have closed in profit yet. Or I'm looking at it and I noticed that I've made $2,000, but I have $1,000 in drawdown. That's me monitoring it. So I can say, hey, am I going to wait a little longer to see if this $1,000 is going to come down and I can make more money? Or am I going to close this $1,000 drawdown and just make $1,000 in profit today? That's me managing the software and kind of using my better judgment in that regard to say, am I going to be greedy and try to get more money, or am I just going to take this $1,000? Okay. That's what I mean when I say manage. But jumping over here to the settings. Okay. Allow buy is pretty much the same thing as you see under the common tab. All right. You want to leave that to true and true. Okay. But you don't necessarily have to if you know how to trade. Like, for example, if you notice that gold, for example, well, I'm not even don't even put it on gold, really. Technically, it shouldn't even be on gold. You can put it on there, but you're going to have to use very different settings when it comes to that, but it's not really made for gold technically. Okay. But let's say, for example, GU is in a bullish trend and you know this. Okay. Or let's say if GU hit a demand zone, right? And you know it's in a demand zone and you know it's going to keep buying up. You can just take off the sell and set that to false and just set it to buy only. All right. And the EA would just buy. Okay. It would only take buys. Or if it's bearish and you only wanted to take sales, it will take sales. Because some people say this all the time. Well, how come the EA is buying in a bearish trend? Well, that's because you didn't turn off, okay, buys. If you notice, you can just go in and change the setting to do whatever you wanted to do, guys. Okay, you got full control over it. And also in the testing phase, don't be scared to mess with the settings. That's what testing is for. Like, it just blows my mind that so many people are afraid to mess with the settings when you're testing. It's a demo account for crying out loud. Tweak whatever you want to tweak to try to figure out. Maybe you will find something that we haven't found yet, that we haven't thought about, because we haven't did everything. It's like probably 100 different ways to use this EA, to be honest with you. We haven't done all of them. Okay. So just keep that in mind. Now, the strategy type, let me get rid of that. Go back to this. So the strategy type is on the pure hedging right now, but you can use a RSI or stochastic or manual, which we're not going to do manual. I don't know why that's there, but you see the RSI, stochastic, or pure hedging. So RSI is what's in the actual manual. Okay. And basically what that is, it's going to trade when it's overbought or oversold. Okay, that's pretty much what it is. Now, the beautiful thing about this is you can set your ratios here. Now, the standard for RSI is 70 for overbought, and the standard is a 30 for oversold. Now, if you wanted to go deeper than that and put it at 20 and 80, by all means, you can do that. Okay. Do everybody understand how to use the RSI? This is for people that understand trading. If you understand trading, you can change your moving average method. You can change this. You can change this, etc. The stochastic is pretty much the same thing. You can change the stochastic to meet whatever criteria you want in this regard. Okay. Oh, this is a moving average right here. Sorry about that. RSI stuff, same thing here. You can tweak these settings. The equity stop. All right. So we're going to go back to that. It's on none by default, but you can set it according to amount. So for example, if I do amount, once it hit $1,000, it's going to close out everything and stop trading. All right. If I do percentage, obviously you don't want to have that type of number. So I can do 1%, 1.0, and that will be 1%. At least that's how it's supposed to work. Okay. So I recommend that if you plan to use the equity stop, guys, just test it. Okay. Test it on a small number. Like, for example, if you know that, let me get rid of some of this stuff on the screen. Okay. So if you know, for example, you're going to use the dollar amount and you wanted to calculate your own percentage. All right. Just do it for $100 just to start with, to see what's going to happen. Okay. To make sure it works. You don't have to go a big number during a demo phase in your testing. You know, 9 times out of 10, it's going to hit $100 negative pretty quick. Okay. So just put $100 in there. Let it go negative $100 and watch how it works to make sure it close out everything the way you want it to. If you know you're going to be running it with 2 or 3 pairs, for example, which depending on your account size, I don't necessarily recommend it. This. But if you do that, I believe this should be account wide. I don't really remember how he coded this, but it should be account wide. If not, it's definitely per pair. Okay. Once it hit this value, it should close. If not, then something we need to fix. Okay. So I recommend that you all test this. Max trades per side. Okay. This is very, very important. Per side. That basically means on the buy and the sell. 0 means unlimited. It's going to open up unlimited. If you only wanted to open up 5 recovery trades, put 5. That's on both sides, buy and sell. If it's buying and selling. If you don't want it to do 2, you do 2. Like, you have full control over all of this. And notice I'm going backwards, and that's for a reason. Okay. Now, coming back up here to allow hedge, I like to allow hedging, but if you don't want it to hedge, you can simply set it to false and it will not hedge, meaning that it won't buy and sell on the same pair at the same time. Okay. I like the hedging, but some of you guys may not. Okay. So if you can think of a strategy with it to where you don't want it to hedge, turn it off. If you want it to hedge for recovery, leave it on. Okay. Which I like to hedge, especially if I'm going to be running one pair, because, you know, it might be selling and buying at the same time, but it's still making profit with the hedge. So me personally, I prefer that. But if you're using the RSI strategy, for example, and overbought, oversold, whatever, you know what I mean? You might not want to do that. It just kind of depends on the situation. The minimum spread, you really don't have to mess with that, but that's what it is. That's basically the minimum spread you want the pair to have before it actually trades it. Okay. So if the spread is too high, let me see, the minimum spread is 0. So let's say I don't want it to trade it unless the spread is 6. Okay. It won't trade it unless the spread is this. Okay. But for y'all, you probably don't want to mess with that. Lot size, manual. You can set your manual lot size in this field right here, or you can do automatic and it will automatically set your lot size. Honestly, you probably want to do manual because automatic, sometimes it comes in a little bit too high. In most cases, for what you're trying to do. So just stick to the manual. The take profit in pips. If you are on currency pairs, 10 pips is going to be 10 pips. If you're using something like US 30 or whatever, you got to add an extra number to it, which 100 points. In this case is 10 pips on US 30 or 10 points. Okay, this is 50 points, etc. So we haven't really came up with a solid strategy on that yet, so we're not going to really talk about that too much here tonight. So let me remove this. So 50 pips is 50 pips, 10 pips is 10 pips. Now, here is the most important part here. Okay, and let me draw on this one. Second trade distance, and I need to make that red. Second trade distance. Okay. All right. So I want you guys to really understand what this is. This is your recovery trades. All right. This is your recovery trades. You can set when the recovery trade open. For some reason, people don't mess with this, and I don't understand why. But you want to tweak this according to whichever pair you're trading. And I'm actually going to show you this on the chart here in a second. Okay. All right. So that's where you set the pip distance for when you want your recovery trade to open. So for example, if you were to put it on something like a pound pair or whatever the case, or let's say if you even wanted to try it on gold, if you're crazy enough to do it on gold. Okay. With gold, you might want to have the second trade open up like 100 pips or 50 to 100 pips. because gold can trend and it can go it can go a large number of pips, 200 here, 200 there, whatever. Okay. So you got to be careful with that. But I'm going to show you on a chart how to actually get the most out of this. Okay. Second lot multiplier. This is also very, very important here, because this is when your recovery lot, what your recovery lot is going to be. Okay. This is when your third trade is going to open. This is a lot. This is a distance. This is a lot. Okay. And every lot after this is going to be this. Every distance is going to be this. Okay. Now, Reginald, what does that mean exactly? Okay. So I'm actually going to show you what that means. Let's get rid of this. All right. So let's pretend that actually, let me do this. So we're going to change the initial lot to 1 standard. All right. So we're going to start with that first. All right. So the multiplier is 1.5. So that's basically 150% of the previous lot. Okay. So basically what that means is if my initial lot is a standard, this is just my first lot. All right. When the recovery trade opens, the next lot is going to be 1.50. Okay. And then the third lot is 150% of this. Okay. So it'll be 1.50 plus, it should be 3, I think. Should be 3. All right. And then it just kind of goes on from there. And then another one, then that'll be 450. Okay. Based upon me starting with a standard lot. Okay. So do everybody understand that? So if you go with something lower, let's say if you go with 0.20, type in the Q&A if you understand that or not. Okay. If you go with a 0.20, all right, it's going to be that plus a half. So the second lot should be 25. And then it just kind of goes up from there. And you just keep adding that percentage on to your next lot. Okay. Let me see what y'all saying. Okay. What time is it? Oh, hold on. Okay, cool. All right. So you all get that. So make sure you edit that part though. That's very, very important because honestly, this is probably a little bit too aggressive. Honestly, like 1.5, I probably wouldn't do that. You can probably go down to like 1.2, or you can just double up on a lot. Okay, you can just keep it as that, or you can go 1.1 or whatever. Just kind of tweak it to figure out what you want to do. But sometime, depending on how you structure your distance, you might want to watch your lot. You don't want to start too high because when the recovery trades open, you got to remember it's doubling. It's going to add whatever you have initially plus that percentage on top of that. And it's just going to keep compounding in that regard. The same rule applies for the distance. So if I start with 50, okay, then the third trade distance will be 50 if I keep it at 1.0. Or if I add a 1.5 to it, for example, 1.5, instead of it opening up at 50, now it's going to open up the third trade at 75 pips. Okay. And then come down here, the next trade multiplier If I keep it at 1.0, it would do 75 pips again. Okay. Or if I do 1.5, it'll do 75 plus whatever that is. And then so on and so forth. Okay. So that's pretty much how that works. The distance works to pretty much the same, but you got to remember that these are your starting numbers. Okay. The second trade distance, and then whatever you have here, you're going to add 100%, which would be 50 plus 5, 75. And then you do the same thing here, 75 plus 5, which is whatever number that is. And then it'll just kind of keep going from that point. And then whatever you have here, this is when the next trade is going to open up, this last one. Okay. So whatever you set here last is when the next trades are going to keep opening up. Okay. Is that part clear? Yes, it multiplies the previous lot and trade distance. Okay. That's all that is. So that's pretty much it for the settings, honestly. Like I said, it's pretty simple. But you got to make adjustments. The biggest adjustments you're going to have to make. You can change your take profit if you want to, depending on what you're trading. And how you set this up. I just leave it as is for now. But your biggest thing you want to edit will be your multipliers. This is where you guys are getting slaughtered at. Okay. You're messing up on your multiplier and your second trade distance. Okay. Now I'm going to jump over to the chart here really quick. And show you. Okay. And man, look at that trade. Oh my God. I was trying to take this trade before the webinar. Oh man, look at it. That's like a perfect move. It's going to keep going up. It may come back down to retest. It may boop, boop. I think that's what it's going to do. So I'm going to wait. But look at that setup, y'all. Look at that. Look at that. All right. Let me see if I can get rid of that. All right, so I don't have a good session thing on here. So maybe y'all can find a better sessions. We might have to make it because I don't like the ones on TradingView. But the reason why this is a buy, look at this candle here. That's a bank candle right here. That's definitely a bank candle. You see how I drew that zone and prices in that zone. So it's definitely going up. But it's probably gonna shoot. I think it's probably gonna do that because it's not just gonna shoot up during this time period. So that could be a freebie buy for you. I wouldn't buy now until it breaks the previous high, but I think it's gonna do that since we're not in the session it normally trades in. It's possible. But anyway, what we're gonna pull up. Let's get rid of these. Get rid of that. All right, so I'm actually gonna clear my chart because none of this stuff matters right now. And I had a sessions indicator on here, but I'm just gonna use this one that's built into this, but I wouldn't be able to tell you what session it is. Hold on. All right, let's see, where is it at? Now I can't find it at all. Ain't that something? Hold on a second. Let me see something. All right, so now I can't find it unless I'm overlooking it. Session. Oh my God. I can't believe it. It's usually like right here, but for some reason, I don't see it anymore. So that kind of sucks. Let me see if something, try this. All right. So we're not going to worry about that. So let me see if I can find one. Okay. All right. So that's not working either. Something is definitely going on. Oh, there it is. Oh, that's why I can't find it because it's already on there. All right. So anyway, I'm going to go down to like a lower time frame. These period separators supposed to separate different sessions. I don't know which session it is offhand, but so I'm just going to kind of show you an example. Like if you go into the indicators thing inside of trading view, if you have trading view, you can actually get a sessions indicator that actually color codes the different sessions and go from there. But I haven't found a good one on here yet because the one I was using, it was 100% invalid. So I got to search for one that's here. If not, we'll probably just end up having to make it ourselves because I didn't like the ones I saw so far. So some of you guys ask, okay, so how do I know how to set up my settings? Okay. The biggest thing that you're going to have probably a question about would be the ATR, which is the average trading range per day, which is going to determine when you should actually set your recovery trades. So for example, this is Euro USD, and this is a session from here to here, okay? Or a day, I don't know how this thing is set up. But anyway, going from the low in this up to the high point, you see that it moved 88 pips, okay? So that's for the entire day. Let's just pretend that's for the entire day, 88 pips. So knowing that it moved 88 pips during this time period, then I probably want to have my recovery trade to open up, you know, maybe 40 pips. This is just hypothetically speaking, if I'm going to be conservative. So I want to go half of that if I'm going to go conservative. So my second trade is going to open up 40 pips. And then I can just open up trades every 40 pips if I want to, just by doing 1.0, or I can do 40 and then do 1.5, which will be 40, 60, and just kind of keep going up from there. Okay. And I wish I can get in here, but for some reason, either I'm tripping or this thing ain't working. Oh my God. Let's see. Favorite indicators. Yeah, for some reason, I guess I can't really click it because I'm on the Zoom. So yeah, I can't go into the thing, the marketplace. But do you all understand what I just said though? So all you want to do pretty much is actually, let's go to GU for example. All right, let's use this one as an example because this is actually a good one. The 24th to the 24th. This is all one day. All right, this is probably New York session right here, I'm assuming. This got to be New York session. Okay, right here. This point is New York. All right, because this usually moves crazy during New York, which is why I don't really like messing with New York too much. But all right, so we're going to pretend that's New York. So this range right here, All right, so I will go from this high all the way down to the low right here. And I see that's 112 pips. So I forgot what the settings is by default. I think it's 20 pips for the recovery trades. So if you got this opening up, recovery trades every 20 pips, like you're going to have 5 recovery trades in this situation, probably 4 to 5 different recovery trades, because it's opening up every 20 pips. Okay. And depending on how your lot sizes are structured, your drawdown can be massive. So if you're going aggressive on the lots, you don't want recovery trades opening up like that. You know what I mean? Like in this case, I probably do, if I come and I measure this out throughout the day or throughout the month or whatever the case scenario is, throughout the week really is what you want to base it on. I would have recovery trades opening up every 50 pips. So even if there's a 200 pip swing, in a 200 pip swing, I'm only going to have 4 recovery trades open. Like normally it's not going to go, this pair is not going to go 400 pips or 500 unless it's an event like Brexit, for example, and something drastic happen like that. And in that case, you should have an equity protector on to prevent that from happening. But in most cases, if it goes 200 pips, it's usually going to retrace after that. Like, let's look at this example here. Okay, let's get rid of that. From this low up to this high. Okay, like I said, 220 pips. All right, so you got a 220 pip swing right here. All right, and this is what I'm talking about. All right, even during this period of retracement right here. So let's go from this high to this low. That's only 40 pips. Okay, that's not going to be enough to get you out if you got trades opening up every 20 pips. You're going to still be in drawdown and you're probably going to blow your account. But if you understand this, like pound is one of those pairs that move a lot. So you probably want to base this upon a weekly thing. And how you would do that is average it out throughout the week. So every day you would go and see how many pips, what the range is for that day. And then you want to divide that by 5 for the entire week. And then that will come up with your number. But the high point, usually with pound, you're going to get a 200 pip swing per week. So if that 200 pip swing happened here, all right, you only got 4 recovery trades open, okay, up here. And then once it reached this point, right, it's going to retrace 120. You're out those trades, okay, at this point, because you've measured properly. All right. So I don't really have, let me see. Let me look at my calendar real quick. Today, I can go by last week. So last week, from here to here, this was a range. So we really didn't do much there. Yeah, so basically what you would do to measure it out, I have an indicator that does this too for customers. It's called Trade Info. It gives you the ATR automatically, okay? But for those people that don't have that, basically you're going to take the low and the high for that particular day, and you're going to write it down. Then the next day, you're going to take that low and that high and write it down, okay? Then the next day, that low, that high, write it down, and then add all the numbers up, and then average it out for the week, and that'll give you the weekly ATR. And then that's how you can kind of determine how to set your recovery trades, okay? So that is pretty much it. I really don't have anything else, honestly, because it's really simple. Let's see, from here to here, let's see what this one is. 200 pips. It might even go down to here. All right, and then from there go up. So if you're trading, but in closing, I would say if you're trading something aggressive like a pound pair, or even this pair. Like every now and then you'll get those crazy moves like this. And if I know that, hey, in a week or within the previous week, this thing had a 200 pip swing, then I'm only going to do 4 recovery trades. And I'm going to come back over here to my thing, and I'm going to have my trades opening up recovery trades every 50 pips. Okay. And like I said, you can keep it at 1.0 for the third, and it'll just keep opening up 50, 50, 50. Okay, for the third and the next trade distance. If you do that, it'll be 50, 50, 50. If you want it to keep increasing based upon whatever theory you have in your head, like if I go 50 pips in drawdown, you can open up a recovery trade. But if it keeps going another 50 pips or beyond that, I can do 75 on the next time. Then you want to add 1.5 and then just kind of keep going up from there. That'll kind of safeguard you from opening up a whole bunch of trades with massive lots too soon. And you will likely be able to get out that trade. You may stay in it a little longer though, honestly, but your drawdown is not going to be as high, and it will safeguard you more so if you do it that way, because depending on which pair you're using, like it can be a ridiculous trending market. Like if you're trading a JPY pair, let's look at this one. For example, like this pair trended from here all the way up here. And that was, I can't even see the pips on this. Hold on. Let's get rid of this. Even though you shouldn't put it on this one, I'm just going to do it for hypothetical example. This trended 474 pips, right? So if you got it doubling up your lots like that, then like I said, you won't have as many opening, but you know what I mean? You want to stay away from these because this pair right here trends a lot and you will probably get demolished. Now, this one can too, but it's not as bad. Let's see, this from here, 200, like I said, 286 in comparison to 400. So it's not as bad, but if you're doubling up your lots like that, 50, 50, 50, like I said, you won't have any issues. Now, if you're using the RSI strategy, okay, now this is a very, very critical point as well. And I wish I could get into my indicator to pull. Do I got the RSI on here? I don't even see my stuff on my chart. Hold on, let me refresh. Oh, there it is. Kinda. Well, this is a MACD. Okay. Let me see. All right, this is the MACD. So let's say, for example, you're using a RSI strategy. Okay, this is all hypothetical, and everybody on here should know how the RSI work. Like for example, where is the annotate? All right, so this is overbought. Okay, clearly it's overbought. If you look at the bottom, hold on, I can't see. Hold on a second, guys. This trading view stuff is in the way. Hold on. All right, so clearly this is overbought. All right, I use the MACD. I like it better, but you see the histogram is dark green. My lines are floating above this, etc. This is not an RSI. If it was an RSI, you'll be able to see that the line is like above the 70. It's probably close to the 80 or 90. Okay. So knowing this, overbought does not mean that it's going to sell right away. That just means that a sell has to come eventually. So this has actually been overbought for a long time. We even have divergence here. Okay. And I'm actually giving you all a free markup session on here as well for you guys to trade. Okay. So you got divergence, right? This is going up, divergence. You got a little drop. This is a little correction. And then we're probably going to get another drop down. All right. So knowing that, I'm trying to stay on topic, but I'm marking up charts too. All right. So knowing that it's overbought, this is my point. If I know that it's overbought, okay, if I'm using the RSI strategy and it's overbought, you can set it at whatever you want it to be at before it starts trading. Then that's a whole different strategy and ball game from what I just talked about. What I just showed you a minute ago is purely based on hedging. But if you're doing stochastic or RSI, whichever one you like better, then obviously you can do something different. You know what I mean? Sometime it may keep going above that a little bit more, but you may want your recovery trades for the RSI to open up every 40 pips if you set it at 80 overbought, because it's not going to go like to 200 unless there's drastic news or whatever. All right. But you may only want to do 40, or you may only want to do 50 or 60 or whatever the case scenario is. But your recovery trades may be a little different if it's overbought. And you will have to back test that by going on your chart and looking at time and periods when it's overbought and oversold, and to see how much further did the trade go before it actually reversed, is what I'm trying to say. And based upon that, you'll be able to determine how you should structure and set up your settings. I can't show you here because I don't really use the RSI, and I can't load it because for some reason, while I'm on Zoom, it's not allowing me to load it. So that kind of sucks. Actually, let's come back over here to MT4. Let me see if I can do it over here. Even though I don't mark up on MT4 at all, but we're going to try to do this here. Okay. Also, guys, this, I don't know if you have this, you probably don't, but this buy and sell basically turns it on and off, but you probably don't have that on yours. Let's see, let's get rid of that. And I don't use MT4. Let's see, relative strength. In it. All right, so this is the 70. This is what I'm talking about right here. This is the 70 line. That's in the settings. This is the 30. Move that up here. So that's what I mean. So if you wanted to go higher, you can. So let's put something on here that we actually trade. Let's get rid of this. All right, so let's do this one. Oh my goodness, it's not loading. All right, so let me see if I can get it to load this way. It probably won't load because this account is not even active. So let me come over here to this chart. Minimize that. Get rid of this. And don't be afraid to test. Like I said, this account right here is a test account, and I'm not really worried about winning or losing. I think some of you guys got the wrong idea about testing. It's not about winning and losing all the time. It's about seeing how far you can push the EA. Okay. So let's see. Let's get rid of that window. Delete window. All right. Insert. All right. Oscillator. All right. So we're gonna come back here. All right. So this is the 70 and 30 line. And Clara Jones. All right, so the 70 and a 30. All right. So you notice, and I'm just gonna stay here. Like if you look through your back testing and you notice every time it gets up here, it's going to reverse, even if it's a little bit. You see it reverse a little bit, but then it came back and made an M on the RSI, which is divergence. Okay. And then it finally dropped. So, but from the first point, from here, let's get rid of this. And this is how I would do it. Okay. I'm showing you what I would do. So I don't know what this is exactly. We're just going to say is 75.80. Okay. I would probably leave it at 70, but this is my point when I say the RSI strategy. So from here to this point, every time it's overbought, like this example, it's not always going to drop immediately. So keep that in mind. It's not going to drop immediately all the time. It may keep going up. So if that was to happen, what you need to factor in through your back testing is how far did it go up before it actually dropped? Okay, so I would measure from this point up to here, and that is roughly another, I would say 75 pips before it actually dropped. So they took everybody out because the market makers know some people only trade overbought and oversold, okay? And it's not always going to drop immediately, okay? So it went up 70 more pips. So let's say if 75. So let's say if you got in most cases, if you're using that strategy, all right, the EA is going to get in right here, okay? And if you kept it on default, 20 pips, okay, you got probably 3 trades open and drawdown before it actually dropped, okay? So what I would do is, in this instance, is if you got in right here, which you probably did with the EA, all right, and knowing that it's probably could go up another 75, 80 pips, you know, I'll probably set my recovery probably at 40 or 50. It just depends on the situation. If you're going to use the RSI strategy, either 40 or 50 pips will be a safe number to go with, because that's going to have you opening up less recovery trades. All right. So the same rule applies if you're knowing the oversold method. Okay. You want to measure to see how far did it go before it actually reversed. You want to find instances like that on the chart. And back testing is simply just going back in history and looking. And as you can see, I have period separators. Let me get rid of this stuff on the screen. I have period separators on this. I don't know how I got here because I didn't add it, but nevertheless, it's here on the chart. And here's another example. Here, let's come. You see the market is oversold here. But guess what? We're in a bearish market. It kept dropping. Okay. So from that point, from this point to this point, we're at 72 pips. So it seems to be a pattern. 70, 80 pips seem to be like the sweet spot when that happens. And then it actually reversed. So again, 40 to 50 pips, you may have 1 to 2 tops recovery trades that will open, and then it will take you out, and then you're all set. Okay. Or you can do 70 pips. It's up to you how you want to do it. Okay. Because recovery trades do actually help you make more money. But you don't want a lot of them opening. But also, if you look at this, even for your own personal trading, because I know some of you guys trade and you're like, oh, it's oversold and you're getting in too early. But if you wait a little while longer, okay, you wait a little while longer, right? If you wait, look, price is here, but look, divergence. The reversal is going to happen when that happens. Usually, you're just waiting for confirmation. You're waiting for that high to be broke, okay? Or you're waiting for that trend line to be broke. Which the trend line broke, and then boom, it's up. So that's it, guys. That's all I got tonight because I'm kind of rambling now, but hopefully this clear to you. This makes sense at all. I'm hoping it did, because some of this stuff is not in the manual with just too much stuff. The manual will be 200 pages. So let's see. Let's get rid of this thing here. Okay. All right. Ty said this is great. What about everybody else? Hopefully this makes sense. I'm trying to make it make sense and not talk like a developer. But I'm hoping it does. You just got to back test and go look, okay? Like if you're going to use the RSI method or the stochastic, which that method is in the manual, it's probably it could be safer, but you got to back test like that. Like it's different ways. The hedging method is just hedging. The RSI is only going to execute trades when it's overbought and oversold, but you got to go back and back test to see when did the reversal happen during those periods, because it's not always going to happen when it's overbought, oversold. See how much more it went up or down, and then base your recovery trades on that number. Like you can go half of whatever that pip amount is, or you can go exact 70 pips or what have you for the recovery trade. If you notice, like let's say for example, okay, yeah, let's say for example, if you go back and test this, I can't really do it on, I hate trying to mark up on MT4. I'm gonna tell you that right now, because it's just not as smooth and clean as Trading View. So but however you do it, do whatever works for you, since this is on MT4. And it could be because I'm on Zoom too that this is moving kind of quirky right now. But anyway, if you go back and you back test this for like a whole month, and you look for every instance, okay, of the market being overbought and oversold, and you notice when it's overbought and oversold, sometime it reverse immediately, but during the times that it doesn't reverse, price always goes an additional 70 pips minimum. It may be 70 to 75 pips minimum. And so far, I showed you 2 examples. It was between 70 and 75 pips, right? Then you know that you want to set your recovery trade, your second recovery trades for 70 pips. I would go 70 pips. I wouldn't do 75. 70 pips. So when it hit that 70 pip mark, boom, your second recovery trade kick in, and then boom, you out. You know, when the drop happens. Now, you may not get as many trades, but you're getting quality over quantity. And then at that point, once you master that part, then you may be able to go a little bit more aggressive on the lot size at that point, because you notice, hey, I'm doing this and my drawdown is not even 1%, or it's right at 1%. So maybe I can increase my lot size to be able to earn more profit. Like this is when you make those type of adjustments like that, okay? If you notice, hey, you know, my second recovery trade is opening at 70 pips on GU, so maybe I can raise my lot size to be able to earn more profit, okay? But you still want to use the equity protector as well, whether you're using a prop firm or not, because we all know how much we can stomach as far as a loss is concerned. And you want to make sure you stay within that, because every day is not going to be a good day in trading. You are going to have bad days. You may even have losing days. So from a psychological standpoint, I know we want to win all the time, but realistically, that's not going to happen. So you want to make sure you preserve equity to where you're not, you know, doing crazy stuff and not protecting equity and end up blowing the account because you had a bad day and you didn't know when to stop. Okay. But on the flip side of that, if you go back and back test and you notice this, hey, it's, here's another one. Hopefully I can do it. Let's see here. All right. So this is overbought. Actually, this looked like it dropped pretty quick. It's overbought here. And went up a little bit more and it dropped immediately. Well, technically it's overbought here too. All right, so let's see. From this point up to here. This says 100 pips. 100 pips. That's interesting. All right, so that's 100 in that case. Let's look at this one. Yeah, so I don't really see anymore, but yes, sometimes it drops a million, sometimes it don't. So on the hedging method, are you mainly back test and see where it's ranging or in a certain range? Yeah, hedging, it's gonna work best in the range. Well, the EA in itself is best in the range technically, but the hedging method is just hedging, but you're gonna get the best results in the range. But the recovery trades, yeah, you still want to know what the ATR is during the hedge, because even in the hedging method, it still opens up recovery trades. So if I know that I'm going to get a 150 to 200 pip swing per day on that particular pair, then I got to account for how many recovery trades I want to open up. So if it's 200 pips, for example, in a day, I may only want to open up 4. So I will open up a recovery trades every 50 pips. You know, if you notice that the drawdown is too big, you may need to change your lot size and the amount of pips your recovery trades open up, and that will be determined based on what your ATR is. So for hedging, are we interested in ATR? Yes. So for hedging, are we interested in ATR and kind of base recovery trades on splitting ATR in sections? Yes. Yes. Yep. You're looking at the ATR on the hedging. So GU, that can go 200 pips in a day. So you may want to do every 50 pips, every 60 pips for sure on the hedging method. The RSI is going to be a little bit easier. You do want to use this on the 1 hour time frame as well. Always do not go less. If anything, go higher. And yeah, but try. Okay. I highly recommend that you all try the RSI method as well. Like, get another broker. It don't matter who it is, because pretty much price is going to be the same. And my kid's supposed to be asleep. It's 9:30. So yeah, I'm gonna have to end this real quick because I got to put them to bed for school. But try the RSI method as well and see which one you like best. Okay. The hedging and the RSI is probably the 2 best strategies in there, unless y'all figure out something with the stochastic. Okay. So try both. Don't just limit yourself to just one strategy. They're there for you to test them. Try the RSI strategy. I just showed you some very, very key points on the RSI here just now, to where you will take safer trades. It's not just going to open up random trades. It's only going to open up trades when it's overbought and oversold. But when it does, okay, you know that price is going to reverse soon. It may not be right away all the time, but it's going to reverse. Okay. And you can structure your recovery trades a little bit more strategic with the RSI. On the hedging, you can still do that, but you got to make sure you measure out the ATR. So it's 2 different strategies, but they both work effective. You just got to figure out which one you like best. And in order for you to do that, I highly recommend you get at least two instances of MT4 and run both strategies simultaneously on different MT4s. It can be different brokers. Try it with one pair at first. Don't try to load like 8 pairs on there, because you're not going to be doing it in real life. Okay. If you do, you're probably going to blow your account. All right. So start with just one pair and kind of go up from there. If you notice that one pair, you're only getting 1% drawdown, then add another one. But don't start with 8 pairs, because you're not going to get any good data from that. Okay. Start with one pair. It can be GU, EU, UJ, or UCAD. You can do UCAD as well. And then you'll be able to get some real data from that and then go from there. But you can also use it for whatever you want. I mean, I just kind of named, some pairs. Stay away from gold though, and US 30 right now until we figure those two out. So do y'all have any other questions? Because I think I pretty much went as deep as I can go from what I can think about right now. The manual is pretty basic, guys. It is done. I just got to take that Instacoins. I have Instacoins in it, and I haven't been able to take it out yet. That's why I haven't put it on there yet. Because Instacoins is just going to create a whole nother situation for me that I don't want to deal with right now, because it's going to have people having a whole bunch of questions. So that's why I haven't put it on there yet, because of the Instacoins thing. We don't use them no more. They're like the FBI. They ask for so much information. It's crazy. So I don't recommend them anymore. So I got to take them out the book. Yeah, the manual, you can get the manual, but the manual is not going to have, let me stop my screen share. The manual is not going to have like this. Let me see where, let me pull it up actually. Where's the manual at? I just seen it. Let me find it and I'll tell you exactly what's in it. Like a lot of this detailed stuff and strategies, I didn't put that in there. And let me stop the recording. We don't need to